Hello and welcome to Extraordinary Women TV with Shannon Skinner. I'm your host. Well, today's show is all about money. In the first half hour, you're going to meet Judi Johnstone, who is the Vice President of First Vancouver Finance. She's here to talk about alternative forms of financing for small business owners. So if you are a small business owner, you're not going to want to miss this show. Later in the segment, before we take a break, I'll have my regular Good to Know Minute when I ask my guests for their top success tip. You'll hear Judi's. In the second half of the show, we'll be talking about ways to save your money. So stay tuned. Judi Johnstone, it's nice to have you here on the show today.
Well, Shannon, thank you so much for inviting me today. I really appreciate the opportunity.
Now, you're the Vice President of First Vancouver Finance, which is, provides commercial financing solutions to small, medium-sized companies dealing with cash flow challenges, as so many entrepreneurs know a lot about. And I'm really grateful to have you here today. But of course, you're in the world of financial services, but you haven't always been. You started off your career in real estate.
I did.
This is something that I think is really interesting. You had a very successful career in real estate.
I did. I was in real estate for 20 years, and I think during that time I probably did every aspect of real estate that people could imagine. And I think what ends up happening is that you find that that builds a platform for you. And you don't know whether you're going to continue on, maybe specialize in a particular part of that industry, or whether it's time to take it to another level, take it to another part of the world and new challenges. And I was probably at that stage of my life. The children were raised, they were gone, and it was time for me to look at what am I going to do for the next 20 years. So here I am, 15 years later, having worked for First Vancouver Finance, and have enjoyed every minute of it.
Yeah, and you're having a lot of fun, and you're traveling, and you're doing, it has some criteria that was important to you in this whole new shift of career. And
well, it was interesting, and probably that criteria came out in the very first conversation I had with the gentleman I work with and for, because he asked me exactly that question: why would you change careers? Why would you give up a career that you've had for years? You could continue on for the rest of your life. And I said to him, you know, I have 3 goals for my retirement. My 3 goals are meeting new people, having my mind challenged, and traveling. Coincidentally, the job description is meeting new people, having my mind challenged, and traveling at his expense. So if he's out there listening, that was the bonus part. And it really has been a bonus for me, because I've found small towns everywhere, little towns in Ontario and New Brunswick and Newfoundland that I never would have seen if the clients that we now work with weren't located in those small towns and cities.
well, that sounds really intriguing. Was it a very big learning curve for you to go from real estate into financial services?
You know, interestingly enough, you would think it might be. But what I found with real estate, because I did a lot of real estate of selling businesses and talking to business owners. So because of that, the comfort level in dealing with bankers on that commercial banking level, the lawyers and the accountants, was already there. Even though I didn't really realize how strong it was, I was comfortable walking into situations, introducing myself, literally walking in off the street, telling people what I do and how we do it. It was always just easy to do that. And I think that's what the real estate career did for me, is it put me in a comfort level of just walking in the door, expecting that people would have at least some interest in what I had to say. So the learning curve was in finding out that there were these solutions, and that not only were they out there for many, many years, thousands of years, but that our company specializes in them. So what I got to do, which was certainly my pleasure, was I got to learn our business from the inside. Most of my training was done by the gentleman who hired me, who's my boss. He's also the underwriter for our company and a managing partner. So the information doesn't get any better than that. And he would take situations and teach me from each situation what was good about it, what was bad about it, and how it could be improved.
Did you have to take any sort of outside courses at all?
The company that I work for is very solid in bringing in training for us. So at any given time, they'll bring in specific training for specific needs. What I find is the best information that I can get is by paying attention to different industries, paying attention to what they have out there, trade shows.
Sure.
Do they have associations that I can be learning from?
Right.
That's where I get most of my information, and it keeps you up to date. That's probably the key, is to stay up to date. Don't lag behind on what an industry is up to.
Now, You're a grandmother as well.
I am a grandmother. I have the pleasure of being the grandmother to a little 3-year-old who lives here downtown Toronto. His name is Ben, and he's just the light of our life. And I think probably he has brought a different dimension to our lives, to my husband and myself and to all of his grandparents. And I think people that think that they have found all the excitement in their life need to have a 3-year-old. You need to put a 3-year-old into it. They see things so differently, and they have you seeing things with fresh eyes.
Now, first, Vancouver Finance. Let's talk a bit about the company.
Sure.
Let's tell us about some of the services and the background.
First Vancouver Finance is a privately held company where the Canadian affiliate office of a U.S.-based company called Commercial Finance Group.
Right.
Having said that, we have offices in the United States, Canada, Australia, and Europe. So as a privately held company, though, that gives us some flexibilities that likely publicly traded companies or companies with a superstructure probably don't have, because what we have is the flexibility of listening to our client needs and being able to try to respond to those needs and create something special for them if that's what we need to do, be able to hybrid our services. Financing of receivables, financing for cash flow solutions is our sole target. When we go out there looking for new clients, we're looking for those types of clients that have businesses that are probably being held hostage by their customers' abilities or their lack of abilities to pay their bills on time or in a timely fashion. So those are the type of clients that we look for. We deal with manufacturers, suppliers, and distributors of product or services, doing business in a business-to-business environment and extending credit to their customers.
So not any specific one industry. So you work sort of across.
It's easier for us to tell you the people that we don't look for as clients, because that would probably be construction companies, anything that's in a subcontract trade relationship. So electricians and plumbers, drywall installers are not likely to ever be our client. The other side of the no list for us would be people that are fee-generated receivables, and that might be real estate fees. That might be doctors, dentists, that type of fees.
Sure.
But anybody who's billing for a commercial product or service is definitely under our radar.
So what then makes your company different than the banks?
Actually, the differences between what we do and the bank is so simple that it boils down to one word: lending. A bank is set up to lend money to its customers. The reason it does that is because it has depositors. The depositors have left their money on deposit for the bank to lend that out and receive a return based on that risk or that potential of earning interest on that funds. What we do is based only on the receivables that a company has. We're not going to lend them money. What we're going to do is purchase those receivables. We're actually taking a dormant, if you will, asset of that business. We're advancing funds based on that, making those funds available to that company in a more timely fashion than their customers are. So because of that, we're able to look at accounts that sometimes the banks are not able to look at, because the bank is looking at the strength of the owner of the company to be able to repay a line of credit, to be able to repay money that has been lent to them. We're looking at the strength of our clients' customers to make sure that they're a credit-worthy customer for our client, and that they have not only the ability but the desire to pay for what they received in product or services. So what that does is it allows us to work with some clients that the bank maybe has to turn down or maybe is not ready yet to lend money to, because that company has not yet reached the level of activity or does not have the underpinnings that that bank is looking for at this time.
Now, why do banks maybe not take that kind of model, a similar model to yours?
They do in sort of a different way that people probably don't relate to until we explain it to them. And some of the times when I'm on the phone and I'm talking to prospective new clients, they'll say to me, well, if this is such a great idea, why don't the banks do it? Well, the simple fact of the matter is the banks do it, and they do it very well. They do it based on either their credit card relationship with either personal credit cards, or even with their consumer and commercial credit card divisions.
Right, sure.
But they also do it with their debit card relationship that they have with everybody probably on the planet. So if you have that relationship with your bank where you have a debit card and you go shopping today and you go to the mall, but your bank is in the far left-hand corner of the mall, you happen to come in at the far right-hand corner of the mall today, you may not want to walk the length of the mall to get $100 or $50 or $20.
Because I might be too tired with my arms hanging onto too many bags of clothes.
Onto the bags. And you may have doggedly decided you are not going to put anything else on your credit card if it's only $6 or $7. So you want to have a little pocket change. So what you'll do is you'll walk over to a competing bank, you'll walk right up to the wall, put your card into that machine, go through the series of questions and answers. The last question that that bank machine is going to ask you is, may I have your permission, Shannon, to charge you $1.50? And you hit the OK. And what you've done as soon as you've hit that OK button is you've said to that bank, I am prepared to pay you for the convenience of my not having to walk the entire length of this mall to get that same money out at no charge. Right. So people do understand that relationship. What we do is we convert that into a commercial application. We give them the convenience of their money today rather than them walking across the mall 45 days from now and being able to have that money in their bank account then to use for all the good purposes that they have.
So can you give me an example then of a company that you've helped either turn around or you've come in to lend them or provide an equity share within their company so they went on to be successful?
One of the ones that kind of pops to mind immediately is a company that was manufacturing in the plastics industry, and their customer list was golden, absolutely golden. There was nobody on their customer list that you wouldn't have recognized just at a glance. You see their products everywhere you go. The problem is this company had gone through a bit of an ownership shift. They'd gone through purchasing the property they were in, so they had leveraged a lot of their equity of their business into a mortgage. The equipment that they had brought in, some new equipment, they had brought it in, but it required a lot of maintenance and a lot of startup time and energy. So all of these things were tapping into their day-to-day productivity. What that does is it eventually erodes the credibility that you might have with the bank, because the bank is looking at you constantly and repetitively creating a certain amount of profit to be able to maintain a line of credit, to be able to maintain the relationship they have with you. So we were brought into that situation, coincidentally, not through the bank, but through a partner of the bank's, a business consultant, who works closely with that bank when they have these situations, and he saw the financing of their receivables as a good solution. What we were able to do for them, because of the quality of their customers, is we were able to provide a much larger line of credit than what the bank was currently providing for them. That gave them the ability to pay off the equipment sooner, which certainly helped to decrease their monthly obligations.
Yeah.
It helped them to make sure they stayed current on things. Their rent and their mortgages were never in default. It helped them to very, very simple things, staying current on source deductions. There's a huge penalty in Canada if you pay your source deductions late.
Yes.
So being able to offset some of these things helped that company move on to the next level and certainly be able to enjoy the banking relationship again at a much stronger position than they were prior to our relationship with them. And that is our goal. Our goal is to incubate companies from one stage to another, regardless of size. We have clients as small as $10,000 to $15,000 a month. We have clients as large as $2 million a month. And that, in our mind, is what defines small to medium-sized business.
Now, Judi, it's time for a break, which means it's my regular Good to Know Minute, and I know that you've got a great tip for the viewers.
Well, and you know what's really funny, Shannon, because I had written this out 3 or 4 times, but I changed it on my drive here. And I think one of the best tips I could ever give to a business owner is follow a proven plan. And a proven plan, in my mind, is what the sports teams do. Every good sports team out there, or every bad sports team out there, has a group of cheerleaders. They have people out there cheering them on, even if they never win a game. These people are high energy, and they're out there, and they're there to make sure you get the attention and that you get the accolades that you deserve. You need to surround yourself with cheerleaders. You need to look to your family, your friends, your clients sometimes, your customers, and even your suppliers. These people are your cheerleaders. These people play a very large part in your success, and they should be able to participate in it every day. They're also the people that will bring you from the bottom to the top when you need to be. But also, if you can, be somebody else's cheerleader. There's nothing more beneficial out there than for you to be somebody else's cheerleader as well.
Judi Johnston, thank you so much.
You're welcome, Shannon.
So get yourself a cheerleader and be a cheerleader yourself. So we're going to take a break, and when we come back, more with Judi Johnstone, VP of First Vancouver Finance. Stay right there. Welcome back to Extraordinary Women TV. I'm Shannon Skinner, and I am speaking with Judi Johnstone, who's the Vice President of First Vancouver Finance. We are talking about alternative financing solutions for small business owners. Very insightful conversation today, Judi. I just want to ask you this question. I keep reading in the media about the credit crunch, since 2008. Is this credit crunch, is it actually real or is it perceived? I mean, is it really happening, or is this something that seems to be in the media? We've picked it up and people talk about it. I mean, what's really going on?
Well,
people getting money.
It's interesting because I'm a lot older than you are, and I'm a lot older than a lot of our clients.
We won't give away our ages.
But one of the things that I find is that if you put it on the front page of the paper long enough and often enough, and people read about it long enough and often enough and talk about it, it becomes factual.
Right.
But I'm not really sure it really does. I think there have been cash flow crunches since the beginning of time.
Yeah.
I think probably Henry Ford had some cash flow problems.
Right.
I think he probably was out sponging money off of his neighbors and his mother and everybody else who'd give him money to be able to build the first Model T. So I have a problem when people say to me, well, it is this cash flow crunch. This is the reason why I don't have any business. It's the reason why I'm going out of business. Is it really? Have you looked? And I think that's the problem, is if people are prepared to look at that as the reason why, then they don't look for the solutions. They're not out there on a day-to-day basis staying current on what's going on. They're not finding out from their bank, what else do you have? What's the new and latest and greatest product that you have?
Yeah, right.
Who can you introduce me to? Who might have the solution for me? And I think that a lot of is what we see, is we see people prepared to dive to the bottom, accept that canned response, because let's face it, it would be great if everybody could just wallow at the bottom with everybody else and say, well, we all went out of business because cash flow was a problem.
Right,
cash flow has always been a problem.
So in some cases it may be more excuses.
I think so. And I
Yeah.
think if you're not an optimist, you probably shouldn't have gone into business for yourself.
That's a good
You
point.
need to be an optimist. I mean,
Yeah.
you need to be an eternal optimist. I need to be an eternal optimist.
Motivated,
Absolutely,
driven.
absolutely.
Yeah.
And if you've got a good idea, you've got a good plan, you go into business to do what you do best. Managing cash flow probably wasn't what you went into business to do. Regrettably, it's what you end up doing. It's how you end up spending 95% of your time. So should you be bringing in some experts? Should you be listening to people? Should you get some mentors in the financing world? You probably have mentors in other things. You probably don't expect yourself to know the latest and greatest technology. If it doesn't relate to your industry, it's not where your interest is. So I really do feel that a lot of people buy into the hype. And if you're going to be in business for yourself, you need to put on your big girl panties, and you need to go out there and you need to look for the solutions.
Your dad has some great advice for entrepreneurs.
Yes, he does. My dad ran his business, and my mother alongside of him at the kitchen table.
Yeah.
So we were raised in an entrepreneurial household. One of the things that my dad used to always say to people when they congratulated him on being self-employed, and about how he could choose his own working hours. And he would say, yes, you're absolutely right. I can work whatever 12 hours of the day I want. And then he would also say to people, the interesting thing about being in business for yourself, when you're busy, you can't afford to take time off. And when you're not busy, you can't afford to take time off.
So there's no taking off time when you're an entrepreneur.
That's right. But if you're doing what you love, then it's an extension of what you're doing anyway. Probably what you're doing to earn your living is what you're doing to fulfill yourself in many other aspects of your life. So get a grip on it, find out where the financing options are, build them into the goals of your company, and you'll probably be able to be much, much more successful financially, but you'll also be able to sleep at night. You'll be able to enjoy what you're doing.
Now, there was an interesting RBC study. I don't know when this was done, but you were telling me a little bit about the study. 36% of men planning to open a business do so because they want to become wealthy, but only 23% of women planning to open a business do it for the same reason. What's going on there?
When I read that, I thought to myself, you know what? That may or may not be true. I'm not sure if I was one of the respondents to that survey. Women are not necessarily the first people to admit that wealth might be one of their goals. So I'm wondering whether or not it's actually indicative of the real responses that people gave or people would give. Because I'm thinking that you do go into business and maybe women just define wealth a little differently than men do. My feeling is that the men may have taken that question as wealth as it relates to money.
Right.
Women may have taken it as money not so important, more so the wealth of information that I'm providing to my customers, product or services I'm providing, benefit I'm providing for my family, the day-to-day feeling that I get from accomplishing what I'm accomplishing. So I think the word wealth there may be a little skewed when it comes to men and women.
Well, yeah. Do you think that men and women would define wealth differently then?
I do.
Yeah.
I really do think they do, especially if they're taking a survey, because I think men are probably looking at it purely and simply, responding to the word. Women probably responded differently, and I think the study even points that out. They respond differently to quality of time, juggling family with their business. So there's maybe a little difference in that.
Yeah.
At the end of the day, if you add up the numbers, they probably don't add up to 100% anyway. Because I think everybody, different times, different stages, the numbers are different, the responses are different.
And do you think that women actually have more common sense when it comes to business?
That's an interesting question. I'd have to tell you that I have never really seen a clear definition between women with common sense and men with common sense. I think it's a people thing.
Yeah.
I really do. I think you either have common sense as a person or you don't. I think probably if you do have common sense, it's probably a very large part of whether or not you're going to succeed in your own business. Because you're going to intuitively know when to make a jump, when to leap, when to change. And I think that probably you're going to find the most successful people, regardless of sex, regardless of industry, are the people who do have common sense.
Now, before we run out of time, do you have, you've got some tips that you'd like to offer small business owners out there?
Well, I think one of the best tips that we give to our clients is something that you learned in kindergarten. It's as simple as that.
To play?
You learned in kindergarten, don't talk to strangers, don't cross the street without holding somebody's hand. Well, you learned a couple of other things too, but those two are probably the two important things that you learned in kindergarten that carry on throughout your life, and they carry on into your business life as well. If you choose to go out there and lay yourself bare to all the strangers out there, you're not going to own your company for long, or it's not going to run well, and it's not going to be successful. If you can surround yourself with people that you know, people that you trust, these are going to be the people that are going to tell you when it's the right time to do things, when it's the wrong time to do things, when your decisions may or may not be clear. So find some people that you trust. Make sure that these people have your success, in their hearts. The other thing about crossing the road and holding somebody's hand is know that there are times that you can't do it all yourself. That you are going to have to reach out, you're going to have to ask for help, you're going to have to accept that. So make sure you're not crossing the QEW or the Gardiner Expressway without holding somebody's hand.
Right.
And I think that's a large part of what we see with business owners is they are getting better at surrounding themselves with good people.
Yeah, quite a challenge,
Absolutely.
Well, Judi, it's been such a pleasure to have you on the show. Unfortunately, we've run out of time, but I've truly enjoyed this conversation. It's been insightful, so thank you for sharing your wisdom and knowledge.
Well, thank you very much for having me on today, Shannon. I've enjoyed every minute of it.
Well, we're going to take a quick break, and when we come back, you're going to meet Janet Bakarani, who is the founder of Dedicated Financial Solutions. She's here to talk about ways that you can save your money now that you've made it. So stay right there.